Hello, everyone, and welcome to today's educational webinar here at TradeStation. Our presenter today is Mr. Ryan Wilday with a cryptocurrency trading service that he trades on the Elliott Wave Trader Net. Ryan has over 17 years experience trading equities, futures, and options. He began trading the cryptocurrencies in 2013. Today he melds his deep knowledge of the cryptocurrency market with Elliott Wave theory. So I think it's a topic that many of our TradeStation listeners and regular perusers of our webinars are going to want to know about. Back in August of 2017, Mr. Wilday launched his cryptocurrency trading service on the Elliott Wave Trader Net, as I mentioned. So ElliottWaveTrader.net. I guess I need to make that perfect. At any rate, let's welcome Ryan today to the webinar series. We've had a good many webinars on cryptocurrency trading. Today we hope that to advance that knowledge with our speaker today, trying to combine his knowledge with the Elliott Wave theory that we're very familiar with here. So about this time, everybody starts to ask, are we recording? And the answer is yes, we are recording. The webinar will be edited and in place on the TradeStation YouTube page by this time tomorrow. It will also be visible for TradeStation account holders in VideoStation. And if you're a TradeStation website user, go to the TradeStation University site and take a look at our archived webinars. Remember that everything we talk about here is for educational purposes only, and all the symbols and all the trading ideas that we discuss are for demonstration purposes. They're not recommendations. Our presentation is not an offer or a solicitation of any kind, any place where we are not authorized to do business, including but not limited to Hong Kong and Japan. Active trading may not be suitable for you because, quite frankly, it's not suitable for everyone. We need to pay attention to our suitability. And options trading itself, options trading and futures trading carry a high degree of risk and may not be suitable for all traders. I've posted in the chat panel 2 important pieces of disclosure information in PDF handout form. You can click on those and they will open in a separate browser for your reading pleasure at whenever it's convenient. These documents are also available on the TradeStation website. Now, Ryan and I talked prior to beginning the presentation today, and we will host questions at the conclusion of his presentation today. I'll try to answer any TradeStation related questions in the chat panel. However, Ryan will take your questions once he's wrapped up his presentation. So at this point, I want to turn things over to Ryan Wilday as we learn about the risks and rewards of crypto trading. Thank you very much for spending time with TradeStation today, Ryan. We want to welcome you to your first webinar with us, and we hope it's a great one.
Thanks. Yeah, I appreciate it. Thanks everyone for attending. So what I'm going to do with this presentation, let's see. Don did a great intro to me. I don't think I need to add anything. In terms of disclaimers, the only thing I want to note in this, in addition to what Don's shared, is that I do discuss products and services in this webinar just to give you an intro about cryptocurrency. And I'm not endorsing any of them. In fact, the space itself is quite buggy, and I can't wait until pros like TradeStation get involved in this in a more fully in the industry. But right now we're talking about very, very infantile exchanges overall. So I definitely don't want to endorse anything, but I do trade on them. So what I'm going to do is give you an intro to how to get started. I'm going to imagine all of you, hopefully, this doesn't take up too much of your time, but have not traded cryptos at all. And then what I'm going to do is talk about trading cryptos with Elliott Wave, which what the theory is at a basic level very quickly, and then how we use it in crypto trading. Just real quick about cryptocurrency. I mean, some of the advantages versus fiat I'm just going to talk about, again, the basics of cryptocurrency real quick. But every transaction in cryptocurrency is irreversible once it's made. And I'm not talking about trades, because if you make trade with a service, you can often get them to reverse the trade potentially, especially those made in error. But the actual transactions that are made on the blockchain are irreversible. The other benefit versus fiat is it's a transparent inflation rate. It's actually, you do have to be a little bit techie, but if you actually can read the code which is public on all blockchains, all cryptocurrencies. You can basically assess their inflation rate, sometimes having zero. So we know that all of fiat currencies are being inflated by all of our central banks across the world, and it's not transparent to us. So there's actually digital scarcity is kind of the term that is used in terms of cryptocurrency, and they're not being inflated without all of that rate being known. Political neutrality, I put with exceptions because we're starting to see centralized blockchains like Venezuela's oil-based cryptocurrency. Singapore's talked about it if they haven't already released it. Low transaction costs. I mean, most of that involves businesses. I mean, businesses that are doing business with Visa, American Express, et cetera, have pretty high transaction costs, and businesses that do their business in cryptocurrency have a lower cost factor. And then they're borderless. While I'm not suggesting that you take money across borders without the legal requirements, basically none of your currency, the big myth is that your currency actually exists on your wallet or on your computer or on your exchange. It actually doesn't. It exists on an open source blockchain that's across the web. And you can literally keep what's called the private keys in your copy somehow or on your person, and then walk across the border and just go to another computer and pull up an app and then pull up your currency and then do what you want with it. So it's a completely different matter compared to a physical fiat currency. Hey Don, someone's saying the sound is fluctuating up and down for some reason. Is that true for you, or is it just this person maybe?
I have made an adjustment to your sound, but I did not. PK told me a few minutes ago that it was okay. So I think it's on your side. Maybe the mic. You'll want to make sure you're right at the mic.
Okay, I'm using an earbud system, so it's kind of right there. Shoot. Let me play the volume a little bit. Is this any better? Strange. All right. I guess just keep going, Don. What do you think?
No, I think you're fine. Keep going. It's okay.
Okay. So you want to talk about unique risks. So again, exchanges are quite undeveloped. Wait till there are some really nice ones showing up, but I can't wait until this gets a more professional space. There's a few nice ones that are starting to form. So there's also no deposit insurance, although there's a couple of exchanges that offer fiat FDIC insurance on the cash that you have in the account. A big issue is no central quote. So of course we have a very developed quoting system across the stock market, futures market, et cetera. We don't get that in cryptos, and so I'll often look for my subscribers. I'm putting a stop on a trade, for instance, and the question is, where's that exchange from? I use a central feed that's volume weighted for my calls on the website, but it's a big issue. You can get one exchange slip over another. Government policy is still new and can change. What I want to say is in the United States, it's actually pretty fair in my experience. I stay really close to how government policy is developing in the United States. It's actually a difference by agency. I think it's quite nice, but it's fair in the United States, but it doesn't mean that some politician could change things. User compromise, and what I'm talking about is hacking. While the blockchain cannot be hacked itself at this point in time, users are compromised left and right. Unfortunately, we've had some serious hacks for subscribers on my website, and that doesn't have anything to do with Elliott Wave. It's just that they didn't keep themselves secure. And then future advances. I'll talk about that a little bit, actually. So future advances in computing could make the blockchain itself hackable, but that's questionable at this point in time with where we are in the technology. One of the greatest benefits I think about cryptocurrency is the low cost of entry. You can really start trading with $5, and I'm completely serious. And that's because the commissions are a percentile of what you're trading. 0.25% is typical, and then on top of it, you can buy. So, for instance, Bitcoin is 7,800 roughly, or 8,000 right now, but you can buy 0.0001, or even less Bitcoin and trade it using the same chart that you would for a full Bitcoin. So it allows you to start in the space without much cost and get a feel for it and see how you like it. 24/7 market and few gaps is a characteristic. Is it a gift or a curse? I mean, sometimes it moves overnight, but it's nice to not have gap risk in trading. Really isn't there. Slippage is an issue, but not gaps. You can easily move funds from exchange to exchange. You don't need to go through the paperwork of moving funds like you would with a brokerage account. I'm going to talk about that real quick. And then less institutional HFT money to me is a benefit, although I'm starting to see bots play. I don't think it's HFT money, so to speak, but there are a lot of bots being written for crypto trading. Which wreaks havoc at times. You got to be a skilled trader and dealing with that stuff. So real quick, we're talking about steps to move it to start trading. It's really this process of moving fiat to cryptocurrency on some exchanges, and then open an exchange account. Sometimes they're the same place you trade fiat, but you may want a more advanced platform. And then send coin to the exchange from one to the other, and just figure out what to trade and then trade. So it's pretty simple. It looks like this. You got your bank account and you open a fiat crypto exchange, and these are limited. There's only a few crypto exchanges that have gotten licensed to work with fiat. That means that they have got, in the United States, they've got a FinCEN license as a money dealer. And so Coinbase, GDAX, Kraken. Coinbase, GDAX is the same company but different sites. Kraken and Gemini are the ones that I use. And then trading platform exchanges are these listed: GDAX, Kraken, Gemini, Bittrex, and Polynex. There's a big difference between the top three and the bottom two. The top three really deal with the large cap coins. We do a lot of trading of the small cap coins. They're fun. They make really intense moves. Great for trading if you trade small. And so Bittrex and Polynex. There's also Binance. I didn't list that here, but I do on the next slide. Is one based in Tokyo, but they're moving to Malta. You have to file an FBAR if you use that exchange. Again, these are, it's an interesting place, but would love to get more pros involved. The basic combo that I trade on is Coinbase GDAX for most of my fiat trades. Some of my large cap coins are traded there, and I do trades on both Bittrex and Binance for the small cap coins. My basic combo. I have accounts everywhere, but these are the ones that I sort of day-to-day trade. And then again, with Binance, you've got to file an FBAR, which is due at the same time as taxes are. And that's basically a foreign banking account relationship form that you file with FinCEN. What I want to show real quick is this is a Coinbase screen. This is this shows how easy it is to buy crypto. So I've gone through the know your customer stuff. That got my passport. All of that. Those laws are really strict in the United States, and for fair reason, to prevent some money laundering. But it's basically this simple. I mean, you go to an account and buy, sell, and then pick your coin, pick your account, and then you buy. Just one thing I want to point out is that it does take, when you do a bank account on Coinbase, it's lower in fees than say a credit card, but they don't give you instant access until that to the coins for trading. So I like to keep a certain amount of fiat available for trades on all of my exchange accounts. It does take some time, but if you're doing like a slow buy over time for a long-term hold, this is kind of the way to do it. You can set up recurring and whatnot. And then what you would do if you want to keep your coins at a place like Coinbase, it's totally fine. But like as I said, I trade on Bittrex and Binance, and what I've got here is the deposit screen from Bittrex, and you'll see like a list of coins. This is when you hit wallets on the site and you see a list of coins. This is really the opening screen you have, and you have a plus symbol, and then I would tap that plus symbol, and then I would get an address and see the address where I've boxed it. And I would basically copy and paste that over to the Coinbase send screen and then hit send funds. And that's as simple as it is. There's some security protocols if you've got yourself loaded with some security settings, but basically that's how easy it is to send money between exchanges in the crypto world. It takes probably about 20 minutes for Bitcoin to arrive in the other site. There's a little bit of, you can see, actually doesn't show it, but there's a little bit of a fee that basically goes to the miners, for the computer folks crunching the transactions for everybody. But that's it. And so, emphasizing the borderless nature of cryptos, this is as easy as it is. But this is also a risk because when you get hacked and you get your user credentials compromised, it's this easy to send it out. So security. I'll talk about that. It's both a blessing and a curse when you're talking about this space. So again, basic level of security, stay clean, free of viruses. If you are trading cryptos, I like to isolate my computer for one purpose. It's got really robust passwords. It doesn't do anything but trading. If you, getting a basic Chromebook is kind of a smart idea. staying clean of viruses is sort of, basic level computer hygiene, but you never know. You never know what you're going to click on. And of course, I've got antivirus software and all of that. Always use two-factor authentication to 2FA for all accounts. That's an example is Google Authenticator or Authy, are two the most popular. And these are basically programs that give token codes on your phone as a second login factor. So it can be compromised, but it makes it quite difficult to be compromised. The way it's usually compromised is through carrier security issues, like they've got your. I was part of the Equifax hack. A lot of us were, and so it makes me vulnerable in terms of the carrier. So I'm actually intending to call my carrier today and lock them down so that they can't. There's no porting of SIM cards, but that's basically one of the biggest compromises right now. Let's see. Once you've logged onto accounts, you want to bookmark that site. I don't know if you've heard, but Google stopped using ads for cryptos, and a lot of people think that that's the world coming against cryptos. Actually, what was happening was companies were putting ads that were fake exchanges on Google, and so people would click on and put their credentials in, and then a bot would basically log into the real site. So that's been happening. So that's why I say bookmark an account once you have credentials on it. So you never go there via Google, you go there via bookmark. Again, hopefully Google takes care of that, but it's an issue. Use unique emails for every cryptocurrency exchange. Like my public emails are not tied to my crypto trading except for I think one, and I don't have a lot of money in there. So that's a security protocol for me. Don't mix everyday email circulating your phone with crypto trading. I don't have, again, the emails related to crypto trading on my phone at all in case I lose it. Because what happens is if you've got a reset password process or something like that, someone can get your credentials. Double check each time you copy and paste an address as well. So like I showed that process where you get an address from Bittrex and you put it over to Coinbase and do copy and paste function, and there are actually viruses that will hijack that and send your coin to somewhere else. Again, this all sounds really scary, but if you just go through all the hygiene, computer security, and keep track of these things, this is kind of the basics. You'll stay safe. I have never been hacked, but it can always happen. I also just keep coins sort of all over the place. There's other things like you may hear about the Ledger, the hardware wallet. I've got 3 of them. They're in my safe. They hold the keys for a lot of my coins that I've got for long-term hold. I don't use for day-to-day trading, so that's another aspect of security I've listed here. Let's see next. So let's talk about trading. And this is where I'm going to start to get into Elliott Wave. So that's kind of the basics of getting involved. If there's any questions at the end about how the heck do I do that, I'm happy to answer. But let's talk about trading. So this is stuff I love. So cryptocurrencies are sentiment-driven market, and what do I mean? How do you value them? I mean, I've seen a lot of attempts at valuing cryptocurrency, and I think they fall short. I think it's challenging to value stocks enough, or foreign exchange, whichever. Valuing cryptocurrencies, I mean, forget it. That's my take. Elliott Wave is the great discerner of sentiment. It's a method that we use to discern sentiment in the market, and the bullish and bearish reactions that happen due to sentiment. We use Elliott Wave to put it on the right side of trade. I'll talk more about it. But we use it to understand direction of trend. We use it for profit-taking target, risk management, stops, long and short-term views. So we're trading multiple time frames on the Elliott Wave fractal, which I'll talk about a little bit. So if you haven't heard of Elliott Wave, it's literally a theory that's almost 80 years old, or a little bit more than 80 years old, by Ralph N. Elliott, an accountant in the 30s. And he suggested the market moves in waves of sentiment to have a mathematical sequence, similar to mathematical structures found in nature. And so we literally, when we're tracking waves, we're using equations, Fibonacci equations. A little bit complex. I don't really talk about them in detail here, but we teach it on the site to figure out what wave count we are in, and we use it also to project forward. As well as stops and everything. So really what this is based on, people are a part of nature, and their sentiment runs its course similar ways that structures develop in nature. I mean, it sounds a little bit esoteric, but we are a part of nature, and that bullish and bearish reaction that happens naturally in the market it really literally has a mathematical structure to it. Where you are in that place and time is something for the Elliottician to figure out, but it works quite well. Elliott used all of that to make some phenomenal predictions regarding the market's progress to carry through his death, and he basically projected a long-term bull market that I believe he said 2012, that I think is still in progress. There are bearish cycles within that, but basically the super cycle that he said was going to start in the 30s, basically still going on, according to all of us. So it's phenomenal. And we're getting near the top of a major market cycle, but we're not there yet. That's not to say that you get these really big downturns like we have right now, but actually our analysts in the market room, the main market room that cover the S&P, and especially Avi Gilbert, really called this downturn quite readily. Most of us have been shorting at least short term, but we're going to be going long soon. So we find this works well in cryptos as well. I mean, again, they're sentiment-driven market, and they have some unique particulars to how their Elliott Wave patterns form. As I stay in the market, I've been doing this now almost 3 years actually. Started the service last year, but I've been a member of Elliott Wave Trader for longer, and I've been doing cryptos and learning Elliott Wave on cryptos starting a few years back. And I've learned its particulars and particular patterns. That's a natural trader who trades their asset, starts to learn the particulars of that asset at a detailed level over time. So this is kind of the Elliott Wave visual. I mean, the trend of a market move. It doesn't matter the asset class. It really forms this 5-wave pattern. Within that 5-wave pattern, it's fractal in nature, and so each motive wave, which are the 1, 2, 3, 4, 5, each break down into subwaves. There's also a particular, one of the rules of Elliott Wave is that the third wave cannot be the shortest wave, and it generally is the longest wave and most subdivided. So often we're trading for that third wave. We'll trade for it could be the third wave of the fifth, it could be the third within the third, it could be the third of the one, but it's always the third wave. It subdivides, lengthens, and gives us the longest trades. If you're trading options, for instance, you would want to trade for the third wave because it accelerates. It usually has not only the greatest price extension, it also has the best velocity. So you want time on your favor. You want to trade for third wave. So that's kind of the basics of trading Elliott Wave at a high level. And then so the next slide. So just again, I talked about the mathematical relationships. I'm just going over it briefly so I can kind of give some context to some of my future slides. But there's a tendency of the third wave to be 1.618 the length of the wave one. You're familiar with that if you know Fibonacci's. I emphasize in log, and log matters versus a linear math. Log matters when you have the stock market over say 80-year period. You start to see a variation between your targets if you're using linear math. In cryptos, we start to see it on hourly. That's how fast cryptos move. So I'm always harping on some of my subscribers who are starting to learn Elliott Wave, and I'm teaching it to them. Like, you have to use log, and I give them the equations. Got to use it. Got to use it. Got to use it. Otherwise, you'll just be off. And then again, so the tendency we want to catch that wave 2 bottom. So the wave 2 retraces tends to be 618 of 1. It can also be 382, 50, and 786, but usually it's 618. And so we start to place our trades in that area to catch this third wave. And then talk about trade entries. So the way we use an entry, we can do a pretty good job of catching where a wave 2 ends, and that's by the substructure of the ABC. So I call this a knife catch, where we start to do some of our small entries. At least I tend to be small during the knife catch at the bottom of wave 2, and start to fill out its structure. I'm not explaining that quite well here, but some of the if you're a technical trader, you're used to seeing that technical divergence on the bottoms, and we track where that divergence shows. So I'm running MACD and RSI next to my Elliott Wave counts, and you start to see that diversion is the same time that count starts to fill out in C, and basically C usually has 5 waves, so it starts to show in the 4th wave, and then we start to catch the trade in the 5th wave, and then we get this high probability setup. So if you get 5 waves up off of that C wave low, you want to start to enter on the third down, and that third down basically is another baby 2 within the subdivision. So that's where you start to get a high probability trade, and then you can go up, and the fractal can continue, and you start to get more higher probability trades as you go along, but you're starting to lose your trade skew. You're starting to lose the risk reward to the trade as you wait. So we're very particular about all of this. I mean, we're basically giving targets for where all of these waves should be showing up on the site. And then, if we get an invalidation of our formulas, so to speak, or Fibonacci's, we basically start changing our count or start to warn subscribers. So very precise trading is basically what Elliott Wave gives us, and it works very well in cryptos. All right, so this is I'm going to take you guys on a moon flight. So I'm going to give you a little bit of personal experience. And moon, there's a kind of a whole slang to crypto trading, and uh, and one of those is moon. HODL, HODL, is another one where people misspell the word hold. But there's a lot of whole slang around crypto trading that sort of shows up on Twitter and social media. And the moon is, this is going to moon is a typical phrase where we talk about cryptos that are really moving. Now on Elliott Wave Trader, I've given some counts, and I'm going to show you a few of them for cryptos out into the future where I see them going. And they've kind of taken on this slang with my subscribers call them the moon count. So we're going to take you on a flight. Just a personal story before we get there. But back in 2016, I was trading Ethereum, which is one of the large cap. It was number 2 market cap to Bitcoin for quite a while. And I was trading this 5-wave pattern as shown here. It started at 41 cents. And I don't think I really actually started until it was something like $4 or something. And I had basically exited the market around $17 when I started to see the potential of this top pattern that showed finally at 21. I think I took a couple more trades when I was kind of doubting that the top was actually in, but I really was largely out by $17. And it kind of drifted. Actually, my marker is off. It looks like, but it's over to the right. Circle 1, which is right about 21.50. And then we started to trace out this ABC pattern, this typical Elliott wave. And it was actually a very shallow pattern. And then it hit 592, and roughly about $7 to $10, I chose to re-enter the market. That was the beginning of 2017. I think I was fully positioned by the time we hit February. And the market kind of came along, and it reached about $30. And according to linear math, I had learned Elliott Wave pretty darn well. There were folks on the site following me as a member as I made trades, and we had already gained from $4 to $17, so we'd already tripled our money in 2016, and we were re-entering the market. And we hit about 30, and I didn't see the topping pattern I'd expect to see through Elliott Wave at that price. And so about that time, and I expected it, and using linear math, and about that time, a guy named Roy, member on the site, made a big post about the importance of logarithmic Fibonacci's. And I got the formulas from this post and had quickly done a spreadsheet to retarget Ethereum based on this 41 cent, 21.50, and 592. Those are our 3 points that we can target the larger fifth wave. And while I previously expected a top at $30 for the third wave of this pattern, I recalculated it and it came to 3,563, no joke. So let's go to the next slide. And so we have been progressing through that count through. So I've largely caught a trade from $7 to $14.20. A core position's held all the way through. I've been trading in and out for smaller positions all the way up. But basically that calculation has panned out largely. We just still got to go one more leg. We're looking at a wave 4 bottom. It's gone a little bit lower. This chart's a little bit old. We've got a lower C wave in that 4 that's on the end there. But right now we've got a setup that in roughly the $500 region for a $3,500 target. Will it hit that? We don't know. There's a lot of sub-fibs along the way that we've got to track, but we've been basically trading this all the way. It's been amazing. What can I say? So when we go to, we use that same methodology on several other coins, we can get similar targets. So if you use the 3 cent, $30, and 215 0 point wave 1, wave 2 in Bitcoin, you get this target for the third wave of 65 to 150. And the nuance between the 65 to 150K, which is a huge range, is sort of the nuance with what happened in between that we were also using to sort of check our targets. And then we have this wave 4 target. So right now we're in 4 of 3, and we expect this run to 65 to be starting imminently. It's not confirming yet, but this is where we are in the trading room. trading for with the support of $3,000 underneath this. If we have a break of $3,000, sorry, $3,500 to $3,000, then this wave 3 has topped. But in the meantime, we're trading at around $7,000 with a $65,000 target. And then we have a wave 4 expectation of 3,200. That can actually drop all the way down to 4,000. So we've actually started to nickname this whole period expected as crypto winter. And we have a lot of coins that should take a bath like that once this top comes in. And then finally, our targets are 2.25 million. Now, I know it sounds nuts. There are, again, a lot of milestones along the way. So I've done a whole article, which you can access for free on the site, where I talk about trading the moon count. And that's basically, you don't put all of your eggs in one basket hoping to get 2.2 million out of Bitcoin, because there's a lot of places that can fail on the way. But that's where the targets are right now. And until I get a signal, and the first one being 3,000 here, I'm trading for it, at least with some of my position long term, and then the rest of it's going kind of in and out. Another one, we caught this. We literally caught this trade from this is called Stellar Lumen XLM. We literally caught this trade from. I bottom ticked this at 0.6 cents and traded. I don't think I top ticked it at 88 cents, but that happened very, very quickly, and we still got a little bit of range to go. It's 3.4 before what we call crypto winter takes it down to 18 cents roughly expected. So this is, I mean, it's amazing swing trading, amazing long-term trading. When I just say to anybody new to this, trade size down. You don't really need, like, I started literally with that $1,000 crypto trading. It's grown immensely, and you don't really need to start this with, as much as you have in equities or futures or whatever you like to trade. Really, you just, it's like a lotto option. A little bit of position just to go a long way. BitShares is a favorite right now. We still think it's actually in a potential B wave that'll take it down lower into a circle 2, roughly 0.2 cents, but it's a great one long term. This one is actually the coin powering a decentralized exchange, which is exchange you just trade basically native on your own computer and keep your own assets to your own possession with your own private keys, which is an advanced technology that's, when I look across a lot of decentralized exchange coins, this is they've got a trend going on. So they've got projections that are really high. So I think it's the year of that decentralized exchange, but we'll see. Same thing with privacy coins. They're coins that are hiding their transactions, and that seems to be a trend right now, based on Elliott Wave. Steam, last one in terms of moon counts. Steam is the coin for a social media site called Steemit. You can basically post and earn crypto, but basically it's got a target of 165 coming up. We've got a potential lower 2. It's down just below the 174 price tag. It is potential, but I don't see a setup for it. So it's sort of our trading range is like 82 cents to 165, which is pretty amazing. That one's growing, and Steemit is growing in users really fast, so it makes sense that coin would be in demand because it's basically limited supply. So what's the great challenge? It's the great challenge we have is how to participate in this. How do you hang? How do you participate in these moon counts? How do you hang on through these 60, 80, 90% drops? And when people laugh, I don't know how many Bitcoin bubbles have been called because it's dropped 60, 80, 90%. That's actually, again, when you look at my counts, that's built into the math to me. It's to be expected. That's the natural course of sentiment in Bitcoin. It's based on that logarithmic Fibonacci sequence. So how do you participate that without riding through that drop? How do you exit the trade? We use Elliott Wave principle for guidance. Just real quick, just some principles on how we do it. How do we get positioned for success? So we build a core position, and things I preach on the site are core, tranche, and our tranche, and that's just basically when you're looking at the long-term counts, you've got a position in there, but that position is going to be the most vulnerable to the long-term cycles of up and down. So it's naturally smaller, and then you learn to trade around the core position with a short-term trade, kind of juice up your portfolio. And how you size or position those or bucket those is really highly personal. I can't suggest to anybody how they do that. I have grown big enough in my portfolio to where I hate sort of slugging around big amounts of cryptos, and I've got most of them off exchange. So I actually have a pretty sizable long-term position, a little bit more than I'd like, but I have a hard time trading all of it at one time. So I've kind of actually come to a point, plus running the service has been difficult, where I've got a lot of my long-term bigger than my short-term. It used to be the opposite. So it's a very highly personal question for each trader. And so this idea of sort of core and short-term trading, I mean, it basically is just balancing the time frames. And when you look at Elliott Wave, I'm going to try to illustrate this. But when you look at Elliott Wave, it's really the long-term position goes through the biggest downturn. So if you think about the fractal, I'm using this 1-2. You might start a core and a 1-2 setup down at the bottom left corner, and then you might add a short-term position in the smaller fractal, and then you might take profit in that short-term position, and then take profit on the core later in the higher degree. So let me circle these real quick. Actually, use the tools I've got here. So so you might enter your core here, and you're really taking profit on your core in a larger fractal while you're trading a short-term position in this 1-2 setup, and then maybe taking some profit on it in the third. You might take some here and take some at the top of the fifth, and you might also re-enter at the fourth potentially. But it's this short-term position that really has a tighter stop. So if you look at where you enter versus our natural stop is about 784. This is your stop. I'm using arrows here. This is your stop on a short-term position, so it's less vulnerable. While your long-term core has a longer distance. This is your stop. And the same thing happens if you're trading, if you're entering here and then you're taking profit up here. If you don't take profit up here, you really have this downturn, which is 618 of the entire move. So we lay all this out in counts for subscribers. It's a great structured way to trade, but this internalizing of the vulnerability of your long-term position in terms of big downturns versus the short-term, which have a smaller stop, is really important, and something I try to teach on the site. To use an example in Bitcoin, so we are now close to a core entry in Bitcoin, which we got a low at 59.20. We can see again a low as 3,000 before we think this bull market or this run is at risk, and we're trading for 65. That said, we get a lot of short-term entries along the way, where you might want to either bolster that long-term position with a bigger position for short-term, or you may just be a trader who wants to trade with short-term and doesn't want to hang on. But if you go back to the previous slide, that top of the 1, that's really corresponds to this 5 here. And so you'd want to take some profit, if not all of your profit. And I plan to exit the market largely at 65K, with except for probably 10% of what I have right now at that level, because I really don't want to experience this. And then even as low as 400 potentially in primary wave 4. So hopefully that makes sense in terms of time frame. I illustrate a couple times until it sort of sinks in. When we're looking at our recent Bitcoin, now Bitcoin, this is an old chart, so Bitcoin basically has done this and is sitting at 7,900. So I'm going to mark that on. So this is a little bit old chart, but basically we got a core entry. We got a core entry here with a short-term stop. So we both our core entry plus our short-term sort of correspond in the same spot here, and the stop was here. You can also ratchet up the stop at the 764 to 888, roughly closer to the bottom, so you don't see it go past the bottom. Because once it hits the bottom, usually it sort of swings right through. Now the potential right now, the paths we have right now, is a B wave up to here, with some potential it goes down to here. So we really don't know yet. We have potential actually bottom forming today that will start a B wave, and then type in B, and then it'll go down to here. Now, if we really get the swing all the way down to the core entry, we have a really great core entry down here in the 3,000 and 3,500 levels circled. So these are all laid out for us. There's a potential that a triangle is forming as well, and so we will never see this low. But that's why we enter back here in the first entry that we got off of this correction, basically. So hopefully that makes sense. And It's basically each of our entries are sort of structured. The stop is structured by Elliott Wave math, Fibonacci's, and then targets. Targets are formed from the Fibonacci's. Now, the reason we were saying B wave top is actually the way this wave has come up and come down. It's broken some of our key targets and stops along the way. So we're now primarily doing the top coming in as a B wave. It could be the B wave or triangle. So we'll never see anything lower than the February 6th low, which is our lowest so far in this correction. So that's kind of the basics of it. This is an old chart, but this basically sort of played out. We moved, once you've got this trade that we took here, which I just showed you in the previous slide, we had to stop here or here, depending on how tight you want to be. We started to ratchet up our stops. So this would have stopped out, and then I actually ended up giving some very tight stops, warnings this would roll over, because we didn't like Fibonacci level that this started to show a top pattern. So I actually gave someone wanted to trade really short term, they could take a stop in here. It's not shown on my chart. So hopefully that makes sense. And so, if you caught a trade here and then stopped out here, I mean, it probably would have been about a 30% trade, maybe 50% trade if you had done that. If you were hanging on to it, you're still up a bit. You're still hanging on to it. You're still up here, but not by much less at this point in time. But we're seeing a bottom in this last arrow for that B wave, which should show a top at roughly 15,000 to 12,000, 15,000. So in this range here is where this gets targeted. And then we'll see if we get a much lower entry after that. So hopefully that all makes sense. I mean, I know what I'm not sharing with you is all the math, and it's just prohibitive for me to go through all of that system. We've got webinars, and we help members who want to learn it. Although some members don't want to learn it, some members want to actually trade along with us without learning the system. Some really dive into it. And I was one of those members that I was literally working a corporate job, learning how to trade Elliott Wave. Even though I've had 20 years trading, I was studying it really hard and started making calls on it, and that's when they hired me. So basically what's happened in my life, and now I've quit my corporate job and I'm just trading and doing analysis, both on, doing analysis on cryptos and sort of trading almost every asset, including options and futures still. So I've got additional links. If TradeStation, I think they're going to provide this to you. You can use these links to take a look. I've got a security document I actually put on our site. You can actually, there's a public area of our site so you can access it. I've got a YouTube video. It's also on the Elliott Wave Trader YouTube videos. I get deeper into, I do a webinar for our members and then posted it later for how to trade my analysis better. There's also some videos on blockchain, which get you more into tech of what cryptos are all about. You'll be surprised. I mean, a lot of folks have a lot of myths in their head about what crypto is and what blockchain is. And I'll just say real quick, it's the future of the internet. I mean, it makes a lot of use cases secure that were never previously able to be done on the internet. So it's changing the internet as we know it. And then there's a you can deep dive into more introduction webinar that I've done on the site, which has a little bit more information. So hopefully that helps you out. And then if you'd like to just see what Elliott Wave is about, you can just sort of join for free for 15 days. We don't take a credit card, so you can just join. You just tie it to your email address, and once 15 days are up, you'll have to either subscribe or drop off. You can catch that here, and then also follow me on Twitter. I do trade calls on Twitter if you want to see what I'm about. I mean, it is marketing. You don't get the full stops and all of that stuff, but you can at least see what I'm about, and then see if my trade calls pan out. They do. Sometimes they stop out, and then you can also. I'm now contributing to Money Show. I've got videos. I'm speaking at all of the conferences this year, and then I do a series of articles weekly on Medium.com, so you can catch me there. And that's about it. I hope that helps. I'll gladly take questions now if you're interested.
Are there any questions for Ryan?
So bottom of Ether prediction. Actually, I would much prefer that it bottomed yesterday, given the level it's hit So if we go much farther, I will allow a little bit lower. But if it doesn't bottom yesterday, then it starts to challenge my primary count. It very much puts 3,500 at risk. I'll have to analyze it some more. I haven't gotten. I'm basically been studying about 100 crypto charts, so a little bit behind on that one in detail. But I did take a look yesterday, and it's got a bottom. Otherwise, we have an issue. That's the way I speak. I basically say probability is it bottoms here. If it doesn't, then we've got a problem. That's basically the way I talk on the site. So it gives people really fair warning on a trade if they're heavy into something. So again, when this question, which cryptos are likely to have a great future? What I can say is I don't do fundamental analysis on cryptos because I question it. Um, I um, uh, I basically look at an Elliott Wave pattern and lay it out, like I showed you, and then put all of the milestones in between. So what you didn't see is all the detailed fibs for every single wave pattern, and so I'm checking those along the way. And as long as it follows that, then I'm looking higher, or starts to break it, I'm starting to look lower. And based on that, we've got a theme. I'm somewhat famous on Twitter for calling Verge. We've got a target for Verge. It's in the $2 range, and right now it's in the half a cent range. So it's got a huge potential trade going on. We're all in it. Let's see, the decentralized exchanges. So BitShares, Binance Coin is actually going to decentralize. Those are good ones. Again, I shared Steemit with you. I like Lumen. I like Ripple after a wave 2 bottom, which could go much lower from here. It's got a nice pattern going future. I can go on and on. I mean, those are just a few. Let's see. Can we trade crypto? I think Dawn's got to answer at TradeStation. Dawn's got to answer that. You can trade Bitcoin futures, yes. So you can use. I actually did a chart for someone asked me. I don't trade the futures for Bitcoin myself. I like the direct asset. Just I don't want to get leveraged on something that's so big. But what I can say is that the direct asset and the futures are really tracking each other well. I did a chart. Someone was curious, and I laid the two charts over each other, and you can basically use my targets for the futures. So if you want to try to trade the futures for 65K, you can. Just know your stops. Um, Hope that helps. Oh, so someone said if not, what's the lower level? I actually don't know it offhand, unfortunately. I assume that's about Ether, and I don't know it offhand. I'm sorry. I just don't have the chart in front of me right now. Any other questions? I'm typing something. Local Ripple can go. We actually have 20 cents for potential C wave in primary too. We actually noted that it topped likely in its primary 5, and when it didn't hold support for another 4th wave in that 5th. And I actually, one of our analysts think it's in primary 2. I think it's potentially in a larger wave 4 that's a higher degree, but both of them show up at this sort of 20 cents level. And right now we're at what? I don't know that price offhand, is like 80 cents or something like that, 70 cents. It's really behaving like it's a larger correction too. It keeps going lower than all of our short-term targets, and that's always symptomatic of a larger correction. See a couple questions coming in. Litecoin has a B wave, and I don't know the price offhand. So a rally that looks like it may have started should be a B wave top, and then I expect a C wave down to 100, and there to be a great buy with targets of like $1,600 roughly. That's where I'm at today on Litecoin. Definitely one I trade, and one I like, and it's been a great trade all 2017. I think we caught it like $7, and now it's sitting in triple digits. So been a nice one. I mean, one of the factors I want to say, Elliott Wave, a lot of the coins, small cap coins, were in large third waves during 2017, so it's harder trading now, unfortunately. That said, we get so much risk to reward on cryptos. It's still a great trade. When you're trading Bitcoin from 7,000 to 65, provided it goes, you still have great R&R, but we don't have nearly as much as we had last year, where a lot of us just pay a lot of money because of the just the big giant third wave that we had in those coins. Bitcoin Gold. I actually it's funny. Someone asked me about that today, and I told them that's a really crappy price pattern. And I said that's a strong downtrend that I have no bottom on right now. And that's because it never had a real uptrend. What pattern is Tether? Tether, if you're talking about US dollar Tether, it actually is just a flat oscillation against the US dollar, unless it's changed. I haven't looked at it recently, but I used to track it for arbitrage trades. I don't do much trading in it, but yeah, I don't know if you know, but it's considered a scam. I don't know if it's true or not. That the company that actually puts out Tether doesn't have the US dollars to back it. It's out there in like something like the trillions or billions or something like that. I don't know. But it's basically been an oscillation against the US dollar, often having a premium to the US dollar. There's no real Elliott Wave pattern on an oscillation. What was the level of Litecoin? So the range to me is 100 to 1600. Not credible. The company, yes. I question its credibility. I would just read up on it. I don't want to bash them any more than the research I've done, as I really don't know at a detail level, but it's questionable whether they have the US dollars to back the tether, the tethers that have been issued. NEO, let's see, we have a potential bottom in NEO today, or yesterday is low. And I think the first degree off this low is expected at 140. Right now it's at 50. And then I forget where the top end is. I think it's in the 300 region. So Bitcoin's 65K. I expect NEO to be in the 300 region, roughly. That's right from the my memory. I don't have the chart in front of me. Bitcoin Cash. Oh man, you're really testing my memory. I have a local bottom here, like a lot of things, and then I think I have a top region in the 5,000. The thing about Bitcoin Cash is it has a diagonal pattern, which is really not fun to trade and super choppy. It's not like the debate of Bitcoin Cash versus Bitcoin that goes on the internet. Which one's better? Well, the Elliott Wave says Bitcoin is better. That's just the wave pattern. It has nothing to do with technology, nothing to do with transaction cost. That's talked about in the debate, but Elliott Wave says Bitcoin's way better. The pattern is way cleaner and easier to target too. Is crypto the future? Okay, so philosophical question. Is crypto the future of money? Here's my opinion. So crypto right now, as it stands, is terrible money. I mean, it's, you imagine going to pay for a bottle of milk at the grocery store, and it's basically fluctuating by 50%, 100% sometimes in a day. That's terrible money. It's not even useful. Is blockchain potentially the future of money? It might be that we see stable blockchain values. So we have something that's stabilized in value, but still is on a blockchain. And I think in that regard, it probably is smart money. And for one, again, knowing the inflation rate is transparent. I think fiat prices is fairly likely when I think about it from the Elliott Wave perspective. I also am very bullish on gold from Elliott Wave perspective. I think a transparent inflation rate is a good thing to have. So that's my take. But it's terrible money as it stands right now. I wouldn't use it that way. Anything else? No one's typing.